If you are in the process of buying a house or just bought a house, you're probably wondering what escrow accounts are. You're probably looking at your closing disclosure, wondering why there's a bunch of money going into one for you. So let's kind of talk about escrow accounts today. So an escrow account is an account that is set up and managed usually by a bank or title company to pay expenses, usually taxes and insurance. Now, there are other escrow accounts that can be set up for other things. Like I've seen them set up before for like repairs that need to happen on the house before the new owners move in, stuff like that. But we're not talking about any of that today. I'm just talking about taxes and insurance because this is the most common one. Okay. Now, this is like you take out your mortgage and then the bank takes care of paying your insurance and your taxes for you. They make sure it's paid. It's really kind of nice. It's a service that's provided to customers so that they don't have to worry about it. So it's quite nice. Now, the monthly payment into this account starting off is usually just like a year's worth of taxes, a year's worth of insurance divided by 12 for 12 payments per month. And then once a year, they will make these payments. Or for taxes, it might be twice a year. But they will go in and make these payments once a year. And that's the monthly payment. Now, when you set up the account and start it off, there has to be a cushion in it. And that cushion is 2 monthly payments worth of money. And it must be kept in the account at all times. You're not supposed to go below that amount. So when you set it up, you have to set up and put in that account the cushion, just 2 months worth, and then however much else will be needed to get you to the next tax payment usually. It's usually taxes. And that's like, if you buy your house in like August, you have time before you make that taxes payment, but not a 6 months worth to get up to what you're going to need to pay it without going below the cushion. So there's usually like a gap there that you have to pay into to set it up. Now, the bank cannot charge you more than what they have on file for what your taxes and insurance will be, even if they expect it to increase. Okay, we've heard that. I've heard a lot of people being like, well, why? I know that my taxes are going to go up. I know my insurance is going to go up because they do every year. Why do I always have to deal with a shortage? Why can't the bank just charge more so that you don't have to face a shortage? And the answer to that is that we can't. Federal guidelines say we cannot charge more than what we have on file for what your taxes and insurance will be. Okay? Now, escrow is usually reanalyzed every year. And there's a whole process for doing an escrow analysis. And I actually love doing escrow analysis. So if anybody wants to see me do escrow analysis, I will do a video on doing an escrow analysis. But I don't know if other people are going to be as interested in that as I am. Okay. Now, when we do that yearly analysis, a lot of time people come up with shortages because, taxes go up and insurance goes up and it sucks. And that's just the way it's been for decades probably. But the shortages are usually spread out over the next 12 payments, usually. And if it's a big shortage, it can be quite the payment shock, which is unfortunate. And I wish I had something more comforting to say about it, but I kind of don't. And it's usually more of a double whammy because like your insurance goes up, your taxes go up, and so this monthly payment also goes up, and your cushion goes up. And then on top of that, you have the shortage that you have to pay over the next 12 months. So it ends up being, a small shortage, a small increase in taxes and insurance can still be quite the hit because your payment goes up, your cushion goes up, and you have to cover the shortage. So it's unfortunate, but it's kind of what happens. So anyway, that is an escrow account that's used for taxes and insurance. So